Here's a counterintuitive phenomenon. Investing isn't something where more effort and research automatically guarantee higher returns. For example, if every investor in the US stock market doubled their research time this year, would the market returns double from 10% to 20%? No, it doesn't work that way. Long-term investing requires clear principles and staying true to your original intent. Simply put, we invest our money into good companies, allowing them to produce things that benefit society and meet consumer needs. As the company generates revenue, we earn a return on our investment. In other words, we are participating in human economic growth. But here's the catch. How do we actually know if a company is a good company? Many people spend every day analyzing industry trends and corporate financial statements. But honestly, these are publicly disclosed data, and the true operational reality of a company often isn't fully reflected in them. And that is exactly why so many investment experts recommend index investing. What is index investing? According to data from S&P Dow Jones Indices, SPIVA, in 2025, 79% of U.S. active large-cap funds underperformed the S&P 500. Long-term statistics show that over a 20-year period, 95% of U.S. equity funds lag behind the S&P 1500. Furthermore, across most global markets, over 80 to 90% of active funds ultimately underperform their benchmark indices over a 10 to 20-year horizon. In short, if you spend your time and energy trying to research and pick individual stocks, your performance is almost guaranteed to lose to index investing. When it comes to specific investment vehicles, I highly recommend market-cap-weighted ETFs that track the broader market. What is a market-cap-weighted ETF? If everyday people want to invest, even Warren Buffett recommends the S&P 500, which is a classic market-cap-weighted ETF. Among the wide variety of ETF products out there, market-cap-weighted ETFs are the best representatives of overall market trends. These ETFs determine the weight of each component stock based on the company's market capitalization, which is the total value calculated by multiplying the stock price by the number of outstanding shares. The larger the company's market cap, the higher its weight in the ETF. The portfolio automatically concentrates capital into large-cap, high-impact industry leaders and heavyweight stocks, reflecting the actual structure and shifts of the overall market. This design automatically adjusts the weight of component stocks as the market changes. It allows investors to follow market growth in a low-cost, passive way without needing to constantly trade. For investors who want to capture overall market returns without the hassle of active stock picking, market-cap-weighted ETFs are a simple and highly efficient investment tool.
True investing doesn't require too much effort. There are so many things in life that deserve more of our time and energy, like our careers, our hobbies, and spending time with our families. If we can take care of our money with the least amount of effort, why wouldn't we? Eastern philosophy suggests that the wealth a person can accumulate in a lifetime is already destined to a certain degree. Therefore, there's really no need to be overly anxious about money. Some people watch the stock market go up and down every day, filled with anxiety. In the end, it harms their physical and mental health, and their long-term active investing performance turns out worse than index investing. That is truly a losing proposition. Conversely, if you can just relax and accept a return close to the broader market by following the index, you'll get peace of mind and more time for yourself and your loved ones. Focusing on the things that matter more in life is a much smarter approach. In fact, index investors know a secret. In the financial markets, accepting the index might seem like accepting average returns, but over the long run, index investors will beat 80% to 90% of the people out there and achieve extraordinary results. Pursue mediocrity, achieve excellence. That is the true essence of index investing. Please note, index investing still cannot guarantee positive returns. The market always carries risk, and every investor needs to maintain a sense of awe and respect for the market. Closing. Investing is all about building a better life, not letting it take over your life. Like we talked about today, there are so many things in this world that are far more important than staring at stock charts all day. If you didn't have to spend time researching stocks starting tomorrow, what would you do with all that free time? Would you travel, spend more time with your kids, or pick up a hobby you haven't touched in ages? Let me know in the comments below. I can't wait to read all about your amazing life plans.